just with Joe Biden and Democrats, but also with Donald Trump, who polls historically badly for an incumbent president. And yet here we are a year out, and everything we can see in the polls, in talking to insiders, and the way things are shaping up in the presidential primary says that both of these old guys are about to be nominated without so much as a serious challenge. So Nancy and I did a real deep dive to take a look at why is that? How did the political system produce a rerun that, like, nobody in America wants to see again? And so that's what we've spent our last couple of weeks doing.
Well, you know, there's a real drain on enthusiasm, which your story showed, mostly because no one wants to relive any part of 2020, including the national politics. But also, Biden is losing African American support, other ethnic minority support, particularly right now, although that may change in a year, Arab American support because of his full-throated support for Israel, which could damage him in Michigan, one of those key swing states. So do you think, Josh, that these voters are probably not going to vote for Trump? Do they just stay home? Do we just have a low turnout election? I
think there's a chance that we might. I mean, when you dig into the numbers, which we did, it is remarkable how unpopular both of these guys are. 65% of Americans do not want Joe Biden to be president again, but they don't want Donald Trump to be president either. 60% don't want him to be president. 50% of people think both men are too old to be president. So America wants a different, younger choice, and yet, because of the primary process in both parties, they're not likely to get it. On the Republican side, because Donald Trump, despite 91 criminal counts on 4 different cases and who knows what else, is still popular, is still winning by a mile in all the polls. And on the Democratic side, because the establishment decided to stick with Joe Biden rather than force him out and let a younger group of people into the race. And a lot of Democratic voters, as you said, are uncertain about that. He's losing minority voters. Mm-hmm. A lot of people are dissatisfied because of inflation, because of his age. And yet it looks like we're going to have a choice between these two guys. And a lot of Americans might just say, I don't want to do this again. I'm going to stay home.
Well, but then it raises the question of a third-party candidate, because to your point, with the structure of the two-party politics, Dean Phillips, for example, who is trying to challenge Biden for the Democratic nomination, probably isn't really going to get anywhere, right?
That's right. I mean, most of the independent and outsider candidates, Dean Phillips is a Democratic congressman, ostensibly challenging Biden in the Democratic primary, but are inept. He's running in a primary in New Hampshire that isn't going to have delegates count toward the presidential primary process. So nobody's clear exactly what he's doing or why he's running. And as for the independent candidates, Cornel West, Robert F. Kennedy Jr., the anti-vax conspiracy theorist, definitely getting a lot of attention in the press and among some voters in polls. And yet, these people don't have infrastructure, and it's not clear whether they're going to be able to get ballot access. So again, it goes back to this unpopular choice between Trump and Biden, which one source described to us as people would rather eat a bowl of glass than have to choose between Trump and Biden again. So it really is, as we call it in the piece, the election that America doesn't want.
Well, as we all know, Donald Trump on the Republican side is sort of the tail that wags the dog of the Republican Party. But on the Democratic side, we've seen this before where, you know, Hillary Clinton was deeply unpopular, exactly right, and Bernie Sanders was sort of the popular choice, and yet the party put all of its weight and infrastructure and money behind Hillary Clinton, and Donald Trump won. Is it possible that the Democratic Party, or is it just too late for the Democratic Party to say, Joe, we love you, thanks, but, you know.
Oh, I mean, barring a stroke or some kind of health calamity, it's far too late. It's probably too late for people coming in now to even get ballot access. The Democratic Party, and Wendy, you're right to say it's the party. It is not rank and file voters. I mean, right. I'm old enough to have reported out in the country when Hillary Clinton was first running. Democrats in Washington had decided she is our candidate, and every voter I would bump into at rallies would say, yeah, I don't really like Hillary Clinton. And sure enough, she wound up losing. Get the same thing in spades with Joe Biden. I mean, voters think he's a decent human being who is past his prime. 69% of Democratic voters think Joe Biden is too old to be president, and yet the Democratic establishment, the White House, have rallied behind him. They have made it clear that any Democrat who challenges him risks their political career in doing so. And so the entire next generation of ambitious Democrats, Gretchen Whitmer in Michigan, Ro Khanna in California, Pritzker in Illinois, all of these guys have decided, look, it makes more sense for me to wait, to bide my time, and to run for an open seat in 2028. Nobody is intimidated by the prospect of Kamala Harris in 2028. They think they'll have a better shot then. And so what we have is a sort of default to Joe Biden, who voters aren't really excited about.
Well, but what we keep hearing is that if this is what we're dealing with, if it's a Biden-Trump rematch 4 years later, no labels will step into the picture. That's when they said that they would put forward a candidate, right? If it was that specific scenario, could that change anything? Does no labels stand a chance when so many voters don't want either of the frontrunners for
no
the two
labels
parties?
no label candidate isn't going to win an election. I think that's basically probably going to tilt things in Trump's direction, which seems to be the point of the party, and a lot of the criticism from Democrats is sort of pointing that out. What it could do, though, is add a variable that makes, we basically have a 50-50 race right now if Donald Trump and Joe Biden are running head-to-head. And a year out, whether it's 49, 51, nobody really knows, but we do know it's going to be close. If you throw another variable into that mix, if you throw in a Joe Manchin or some other no-labels candidate who draws 5%, we don't really know. Is that going to draw from Biden's support? Is it going to draw from Trump's support? So it could create an outcome that nobody really expects. We don't know what's going to happen. That same thing could happen with Kennedy or West, too.
Right.
Well, we're all going to have to wait and see. As you say, we are a year out, so a lot could change.
A lot could change.
But a lot could also stay the same.
And probably will.
Probably will. Exactly right.
Joshua Green of Bloomberg Business Week, thank you very much. And of course, you can catch that full story on the terminal or online. It is a great read. I'm not exactly sure it's going to make anyone super enthused about November of next year, but it speaks to a lot of the dynamics we're seeing in American politics right now, Wendy. So everybody go check that out. Josh, thank you so much. Now, outside of the world of 2024, we got to check on what else is happening in world and national news. Nancy Lyons is here with that in our 99.1 studios here in Washington.
Thanks, Kaylee. Former President Trump is testifying today in the civil lawsuit accusing him of inflating wealth to get better terms from lenders and insurers. Bloomberg News legal editor Tony Lin says it didn't take long for sparks to fly.
It seems like the judge is struggling a bit to get Trump to answer the questions that he's being asked, as opposed to filibustering on the stand about how unfair the trial is, how people are against him, how it's a political witch hunt, etc.
Bloomberg's Tony Lin covering the trial. The judge went so far as to threaten to remove Trump from the stand for essentially turning the courtroom into what he called a political rally. The issue of gun rights goes back before the Supreme Court tomorrow.
The case involves a federal law that keeps guns out of the hands of people under domestic violence restraining orders. The Fifth Circuit Court of Appeals struck the law down as a Second Amendment violation. This appeal will be the first test of last year's Supreme Court decision to expand gun rights based on an originalist interpretation of the Constitution. Proponents argue there is nothing in America's history of gun regulations that resembles this federal law. The Biden administration contends there's other history to look to, including English law that allows the disarming of dangerous people. In Washington, I'm Nathan Hager, Bloomberg Radio.
Michael Bloomberg, founder of Bloomberg LP, donates to groups that support gun control. Hamas says attacks on the Gaza Strip have killed now more than 10,000 people as the Israeli army presses on. Bloomberg's Roz Matheson has more on Israel's strategy.
What we're seeing at the moment is basically an effort to bisect Gaza, north to south. So pushing people south, focusing the fighting on the north, but really cutting off the north from the rest of Gaza.
Global news 24 hours a day and whenever you want it with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. Stocks are struggling. The Dow, the S&P, NASDAQ, all in the red. The NASDAQ 100 index, though, higher, barely, little changed, up 2 points. The Russell 2000, particularly hard hit. Small cap shares down now by 1.4%. S&P lower by 2 points, little change, down less than 0.1%. Dow Industrials down 16 points right now. That is a drop of also less than 0.1%. Little change there. The NASDAQ Composite Index lower by 2 points, little changed as well. 10 years yielding 4.65%, with the 2 years yielding 4.92%. Spot gold 19.79 the ounce, down by about 0.1%. West Texas Intermediate crude up 0.7%, 81.05 for a barrel of WTI. A raft of Fed officials, including Chair Jay Powell, scheduled to speak over the next few days. Marta Norton is Chief Investment Officer at Morningstar.
I think one of the things that we have to recognize when we have a very data-dependent Fed is that it really increases the recency bias that we all have. So whatever data has latest come in is the data that's really dictating market performance until we have a new piece of data.
And speaking of which, Wall Street's wading through the Senior Loan Officer Opinion Survey on bank lending, also known as SLOOS, which showed tighter standards and weaker demand. Move on Monday for a number of CEOs. Dish Network shares sharply lower after the satellite TV company reported revenue for the third quarter that missed the average analyst estimate. It also said its CEO Erik Carlson will resign effective November 12th. Dish now lower by 33%. And Bumble CEO Whitney Wolfe Herd is stepping down from the company she founded nearly 10 years ago. Wolfe Herd had founded the women-centered dating app, which later expanded to include a professional social network, and took the company public in 2021. Bumble now lower by 4.9%. Recapping, stocks have just turned higher. The Dow, the S&P, NASDAQ all back in the green. Fast-moving markets today, choppy trading. The S&P now up by 1 point. I'm Charlie Paladin. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
Welcome back to Sound On. I'm Kaylee Lyons with Wendy Benjaminson in for Joe Matthew today as he's taking a long weekend. And Wendy, we've talked a lot about domestic politics this hour, but we have to talk about what's happening internationally as well. We just got the readout from the White House of a phone call President Biden had with Israeli Prime Minister Benjamin Netanyahu earlier today, in which the White House says the two leaders discussed the possibility of tactical pauses to provide civilians with opportunities to safely depart, to ensure assistance is reached to civilians in need, and enable potential hostage releases. But Wendy, discussing isn't necessarily agreeing.
Right. There's a long row from discussing the possibility of to actually pausing the Israeli army in its attempt to get rid of Hamas at any cost, apparently. So they are this is something the president needs to do first for the good of civilians in Gaza and the dual nationals and the foreign nationals, and also, frankly, for his domestic political needs, which are great. So it's good that he brought it up. For him, it is, I probably can guess what Netanyahu's response was, which was somewhat negative, and at least they'll talk about it again. So, maybe a foot in the door there.
Well, and of course, it's not just the president himself who's been conveying this message. Secretary of State Antony Blinken was in the Middle East once again this weekend. He actually spoke to some reporters in Turkey earlier today about the need for humanitarian pauses. Let's take a listen to that.
When it comes to humanitarian pauses, we're engaged with the Israelis on the particular practicalities of that. One critical aspect, though, is seeing progress on hostages. That's something we're intensely focused on, but we also believe that a pause could help advance that proposition as well.
So let's continue the conversation now. Joining us is Ian Marlowe. He is a senior reporter for us here at Bloomberg on all things foreign affairs. Ian, as we hear the pleas from the Secretary of State, from the president himself, it raises the question on whether the U.S.'s words are really being heeded here. How much leverage does the U.S. have with Israel in this moment?
Yeah, I think not too much. I think Blinken on this trip was stuck between a rock and a hard place in the sense that they're going into Israel yet again. I was on his previous trip a few weeks ago now, where we were closer to October 7th, but that event still resonates. The Israelis are still outraged and want to get rid of Hamas, and at the same time, the Arab world has only gotten angrier since the since the initial days of the Israeli response. So I think Blinken doesn't have much leverage. I think he needs to be seen to try on this, and I think there's also this added pressure of Israel kind of believing internally that military pressure on Hamas is the best way to get the hostages freed, as opposed to the U.S. push saying, okay, well, let's get a pause on the conflict, we'll get aid in, and that will give some space for hostage negotiations with Qatar and others to bear more fruit. But so there's just basically a divergence between what people want to achieve with this, and again, there's a lot of words flying around, from ceasefire to humanitarian truce to tactical pause. Now seems to be the newest one, and they all mean different things.
Well, that's exactly right, Ian. And you and I were chatting out in the newsroom a little earlier. There's more than humanitarian thinking behind this pause, and one of the reasons that the Israeli military may be not interested in it is not just out of bloodthirsty rage, as some people would think, but because there is actually a military strategic danger in pausing the attack right now. Can you kind of walk us through that?
Yeah, I think, what we've seen now is sort of a solidifying of lines out there in the sort of geopolitical world between a ceasefire, which is what a lot of Arab countries want, what a lot of sort of protesters, in the West and other countries want, which is basically an end to the fighting, an end to all fighting, and let's just end the violence. And I think the U.S. and the Israelis from the very beginning have seen a full ceasefire, sort of what most people would consider peace, under normal circumstances, as something that would only benefit Hamas and would undermine Israel's kind of very clearly stated goal from the very beginning of this, to wipe out Hamas entirely, to obliterate their operational, military, and sort of administrative structure within Gaza, their ability to control Gaza and launch attacks. And so anything short of that would be a failure for Israel, and a ceasefire would contribute to that failure in the U.S. and Israeli view. The other side of this is the sort of, some view of a sort of temporary humanitarian pause or truce, or, and this could be anything really, no one knows what it means. It could be anything from Israel not bombing, trucks that are coming into Gaza because they have to go through and be checked by Israeli security staff before they go in, and they just want to make sure that stuff isn't getting to Hamas, like fuel or weapons or other things. So I think there's a sort of semantic argument here between the two sides, but they mean very different things to U.S. and Israeli officials right now.
And of course, Antony Blinken was not just in Israel. He met with the head of the Palestinian Authority, Mahmoud Abbas. He made a trip to Iraq as well. Talk to us about the concern the administration has about this spreading into a wider regional conflict, when we're no longer just talking about Israel versus Hamas, but a lot of players against Israel.
Yeah, exactly. And from the very beginning, that was, on Blinken's previous trip to the Middle East and Biden's trip there as well, the main point has been to stop this war from spreading. And there's two sort of main points there. One is that the war spreading would disadvantage Israel, because if Hezbollah in Lebanon gets involved, or if U.S. assets around the region come under attack and things become hotter in other parts, that distracts everyone from the main goal that Israel has of getting rid of Hamas. The other, clear thing here is that a wider war is just deadlier. It's more violent. There's more chances for civilians to get killed, both in Gaza, in Israel, and elsewhere across the region. And so I think even as you hear a lot of the talk about stopping the spread of the wider war being about civilians, it's also kind of strategic in some sense, in that they want a wider war is bad for the West and Israel. It's to some extent, it's bad for everyone. But yeah, that's just kind of how they're seeing it.
All right, senior reporter for Bloomberg, Ian Marlowe, thank you very much. Of course, a story we continue to follow, as we know that President Biden and Benjamin Netanyahu talked today. They plan to talk some more, Wendy, but again, no agreement made to this point on any kind of tactical pauses.
Well, and as you say, there just isn't a lot of leverage that Biden has over Bibi right now.
Exactly. We'll have more coming up. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Palo Alto Networks is buying Talon Cybersecurity of Israel in its second acquisition of an Israeli peer within a week. The U.S. company, which said last week it is taking over Israeli startup Dig Security, will integrate 3-year-old Talon's browser technology into its network. Palo Alto has been pursuing an aggressive deal strategy to boost its data security capabilities. Palo Alto shares down now by 3.2%. The Walt Disney Company is hiring Hugh Johnston as its new chief financial officer. And with more on that story, here's Bloomberg's Kimberly Adams.
Charlie Johnston is currently the vice chairman and CFO of PepsiCo. He takes the new position on December 4th. Disney brings in an experienced consumer products executive at a time of turmoil in the media business. Disney's former CFO, Christine McCarthy, stepped down in June, taking a medical leave of absence. The Burbank, California-based entertainment giant, which reports quarterly results Wednesday, has been struggling with a migration of viewers away from traditional TV channels and ongoing losses in its streaming services such as Disney+. Charlie?
And that's Kimberly Adams reporting. Disney shares down 1.3%. PepsiCo up by 0.1%. Hilton Grand Vacations has agreed to buy Blue Green Vacations Holding in an all-cash deal for a total enterprise value of about $1.5 billion, including net debt. Shares of Hilton Grand Vacations down 8.6%. Blue Green up now by 106%. Those are our top company stories. This is Bloomberg.
This is Bloomberg Sound On Bloomberg Radio.
We're still live from Washington for a few more minutes, but we have to keep everybody updated on what's happening in a courtroom in New York with former President Donald Trump. Let's first go check in with Nancy Lyons, the Bloomberg Washington 99.1 studio. She's got world and national news for us. Hey, Nancy.
Thanks, Kaylee. Well, it is the story of the day. Former President Trump is testifying in his New York civil fraud trial. Several times, the judge threatened to excuse Trump as a witness if he continued to complain on the stand and not directly answer the questions. Columbia law professor John Coffey says fighting with the judge might look good to voters, but in a court of law, it does not go over well.
If Trump were to confuse the process by having an ugly upset, and he sometimes does lack self-control, then that could make it much more difficult to overturn this judge's decision.
Coffey says there's no question Trump will lose this case, but the question is what will happen on appeal and what penalties will he face. Trump's daughter Ivanka will be taking the stand later in the week. His sons Don Jr. and Eric testified last week. President Biden spoke earlier today with Israeli Prime Minister Benjamin Netanyahu regarding the latest developments in the Israel-Hamas war. The two men discussed ongoing efforts to release hostages held by Hamas and the possibility of tactical pauses to provide civilians an opportunity to leave Gaza. The two also agreed to speak again in the coming days. U.S. Treasury Secretary Janet Yellen and her Chinese counterpart will hold 2 days of talks in San Francisco this week, a step toward more normal ties. We get more with from Bloomberg's Anne-Marie Hordern in Washington.
For her, it's all about the economy. Writing an opinion piece this morning in the Washington Post, listen to what she had to say. This week, I will speak to my counterpart about our serious concerns with Beijing's unfair economic practices, including its large-scale use of non-market tools, its barriers to market access, and its coercive actions against U.S. firms in China.
Again, Bloomberg's Anne-Marie Hordern. Yellen and Chinese Vice Premier He Lifeng will meet on November 9th through the 10th. That comes just ahead of a long-anticipated meeting between President Biden and President Xi. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Kaylee and Wendy.
All right, Nancy, thank you. Wendy, we have to talk a little bit more about what Nancy was just telling us there. The courtroom that former President Donald Trump is currently sitting in, testifying, apparently not wanting to answer any yes or no questions with just a yes or no, which already has had him scolded by the judge a few times for that. His attorneys have also been told to sit down. And now the latest is he's essentially telling those questioning him that this is all unfair and you have no case.
That's right. He's taking his Trump rally to the witness stand. His normal political rally is he's been persecuted, it's unfair, everybody hates him, everybody's out to get him. And this is exactly what he is testifying to, even if the question is, did you sign this document? The answer seems to be, this is unfair, everybody hates me.
Right, which is why the judge has been asking his attorneys to control their client, essentially, because he's not answering the questions that he's being asked.
Right.
And then someone said, you know, you got to hear what he has to say. And the judge said, I'm not here to hear what he has to say. I'm here to hear the answers to the questions.
Answers to the questions, exactly. They seem to be taking the same tactic as his campaign aides, which is let Trump be Trump. And that will somehow win out. Whether that wins out in a court of law with a judge who's been irritated from the get-go with his Trump social media posts and his gaggles and his commentary, we'll have to see if that works, just like it does in Iowa.
We will. His testimony is ongoing, so we'll make sure to keep you updated here on Bloomberg Radio. Wendy Benjaminson and Kaylee Lyons trying our best to fill Joe's shoes. Thank you so much for joining us today. Bloomberg Business Week starts right now. Oh, it doesn't start yet, Wendy. See, this is why we need Joe here. Joe keeps everybody in check. I'm doing my best.
You're
you know,
doing
his shoes are big.
You're doing great, and I'm coming in from the print side, so, you know. But yes, the Trump trial will continue to be.
Yeah, we got 30 more seconds to talk, Wendy. Last thought on this Monday. What's on your mind?
Last thought on this Monday is whether anyone is going to watch that debate Wednesday night.
Oh, true. We're going to have to talk more about that this week because, of course, former President Trump is not going to be in attendance again.
But Nikki Haley might have another chance to show her foreign policy chops.
That's true, as Israel and Hamas, I'm sure, will be a huge topic of conversation. So we'll look forward to that on Wednesday. And now I can say it, Bloomberg Business Week starts right now.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3 o'clock on Wall Street, we'll move into the final hour of trading with the Dow, the S&P, NASDAQ now in the green. Building on last week's surge, has been a choppy trading day for the S&P, higher by 3 points right now at 43.61. That is a gain of about 0.1%. We've got the Dow up 16 points, up by about 0.1%, with NASDAQ higher by 23 points, up 0.2%. The NASDAQ 100 index up 32. That is a gain of 0.2%. Small cap shares, though, hard hit today. We've got the Russell 2000 down by 1.25%. 10-year yield 4.66%, with a 2-year now yielding 4.93%. Spot gold down $14 the ounce to $19.80, drop there of 0.6%. And West Texas Intermediate crude up 0.8%, 81.13 for a barrel of WTI. Treasury yields have been climbing to multi-year highs as investors prepare for an extended period of tightened Fed monetary policy, a pattern that history shows tends to have a negative correlation with stocks. So where should that leave investors? Helen Jewell is head of portfolio manager at BlackRock International.
Corporates who are able to say a little bit more certainty what they're expecting in 24, that to me would be the moment to move and to pivot rather than necessarily waiting for clarity from the central banks. We're bottom-up investors. It's the corporate and the corporate narrative that really matters.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. A number of C-suite departures, a number of different companies, including PepsiCo, Dish, Beyond, and Bumble. PepsiCo's CFO Hugh Johnston will be leaving the company on November 30th. He has been named the Chief Financial Officer of the Walt Disney Company. As for shares of Disney, they're down 1.3%. PepsiCo shares up by 0.1%. Again, recapping a move higher now for stocks. S&P up 2 points, little change there, up by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Good Monday afternoon from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. This is Bloomberg Business Week, but Carol and Tim, they are on assignment today. I'm not sure what kind of trouble they're getting into, but not to worry. As yours truly, Paul Sweeney, and Bloomberg News' Molly Smith will get you through the next 3 hours. And we might even talk a little tennis if I can twist your arm, Molly.
You don't have to twist my arm, Paul. I will give that up very voluntarily.
Molly is the resident expert in this Bloomberg headquarters on all things global tennis, men and women, so we'll talk a little bit about that. Stocks are slightly higher this afternoon. Yields, they're higher as well. The 10-year Treasury yielding about 4.66%. Coming up on the program, we're going to get the market call from Liz Young. She's head of investment strategy at SoFi. Plus, Matt Palazzola, Bloomberg Intelligence insurance analyst, will give us the latest on Warren Buffett and Berkshire Hathaway. Apparently, Berkshire reported numbers this past Saturday. They do it on a Saturday. I don't know why.
Beats me.
People will pay attention to whatever Warren wants. And this is the segment I'm really interested on because I was just saying I need to do a long weekend in Quebec City, honestly, because I heard that's very, very cool. Quebec's Minister of Tourism will join us to tell us why we should consider a trip to Quebec. So I'm all in for that because I was just saying that. So lots of economic data. Really, last week we got some more coming up this week. So let's get two smart economics people here in the same room to talk about it.
My favorite thing to talk about.
Sure, who's this? Mike McKee joins us, international economics and policy correspondent. Anna Wong, chief U.S. economist for Bloomberg Economics. They both join us here in our Bloomberg Interactive Broker Studio, so we appreciate that. Mike, let's start with you. SLUs, what is it and what did we learn today?
You got two smart economic people here, Molly and Anna.
Yes.
And you're going to ask me first?
Please do.
The Senior Loan Officer Opinion Survey, once a quarter, the Fed goes out and asks banks, what's your credit, checks like, are you tightening credit? Are you loosening credit? What about the length of terms, et cetera? And then they ask about what kind of demand there is from businesses and consumers. And this quarter's numbers, third quarter number just came out today and basically said that fewer banks were tightening credit than in the second quarter. Oh, okay. Most banks, I mean, the story, we always look to see who's tightening credit in these situations, but the story really was that almost nobody changed their credit standards in the third quarter, which by itself is a little bit of a surprise given what's been going on with the economy. But the real news comes in the demand side because businesses still, demand is very negative. They don't want to take out loans, particularly smaller companies, but even bigger companies is negative. And then consumers' demand is dropping off. We know that nobody wants a 8% mortgage these days, but also for automobiles and things like that, demand is falling off. So it does suggest that we're seeing some impact of the higher rates that the Fed wants to see. They want to slow lending down, and that seems to be happening from the demand side rather than the supply side.
Right. So, Anna, tell us how this fits into the Bloomberg economics call right now. I know you guys have long been in the camp that the U.S. is heading for a recession. It seems like this would be the kinds of conditions that would be ripe for that to happen.
Yeah, so from an economist perspective, if we look to GDP Q4 forecast, right? In the third quarter, the growth has been driven by very strong consumption, and a big chunk of it is in auto consumptions. So in today's SLUs report, we saw that demand for auto loans is dropping, like seriously dropping. And so we also got the first month of auto data last week, which suggests that indeed the demand for cars is nowhere as strong as the third quarter. So indeed, we are on track for a significant slowdown in consumption in the fourth quarter.
How does that impact, when I see cars, loans, should I also think about real estate loans as well? I mean, mortgages, that type of thing? What are we seeing there?
Yeah, so
I know there's nothing really trading hands at the moment.
Right, yeah. From the SLU survey, we also see a significant slowdown in demand for mortgages as well. And typically, consumption does not really slow down in a recession, especially services consumption, usually even grow on trend in a recession. The stuff that actually gets see a significant slowdown is car purchases and also, of course, buying homes. So ultimately, whether there will be a second wave of housing price correction will depend on income growth and how the labor market stands up to the headwinds of the economy.
Well, I'd like to look at the bankrate.com U.S. home mortgage 30-year fixed national average. It did peak at like a little over 8% just a week or so ago. We're now down to 7.79%. I feel like a rock star.
Wow.
with my 6% mortgage on the Jersey.
6%.
Which I feel like a total nerd paying 6% because even Matt Miller has a 3.25.
I mean, isn't it something like
have you talked to Alex Steele?
No.
In her 2.6?
Oh,
she will be happy to tell you all about it.
Well, isn't it something like what half the country right now is paying a mortgage under 5%, and like maybe of those people, like a third are under 4 or 3%, something.
See, I'm special because I'm paying 6.
Well, it was interesting. We did talk to Bostic about that, and basically.
And tell our viewers who Mr. Bostic is.
Oh, Raphael
please.
Bostic, the president of the Atlanta Federal Reserve Bank.
Thank you.
With whom we had a nice sit down and chat on Friday, and he said, "Yeah, it is a kind of dilemma for the housing industry because." The Fed may bring down rates as inflation slows, but they're not going to go back down to zero. So if you're in one of those categories of people who have a very low rate, you're going to have to decide whether you ever want to sell your house or not. And while that sounds like your own little decision, it does have a spillover effect because if there's no inventory, then prices go up and you still have a problem in the economy. So that is sort of a conundrum the Fed got themselves into that they don't really have a way to get out of except that hope they hit an interest rate on the way down that will be low enough to convince people to start borrowing.
Well, then isn't that exactly, Anna, kind of like the whole point of the higher for longer argument, right? Like, I think it's also about explaining to people that it doesn't necessarily mean higher for longer at the peak of interest rates, but more where the neutral rate, where rates settle, and that is going to be the higher for longer level. Is that the right way to think about it?
Yeah, I think higher for longer is a very powerful transmission of slowing the economy. It's not necessarily where the Fed will raise rates to, but it's how long they hold it. Because imagine a person's balance sheet is very good right now, the typical U.S. household, because they locked in at low rates. However, the Fed cut slower than everybody thought, suppose that at the end of next year rates are still at 5% as opposed to 4%, then that income, that compound interest on people's debt, because on average the American household does have $5,000 to $7,000 in credit card debt. You can imagine that compound interest growing faster than the income growth, which possibly is only possibly going at only 3% per year, whereas interest compounding on your debt is 5%. So that will take time to deteriorate. Then after 2 or 3 years is when the household will feel the pain from this debt servicing ratio to income.
Did I mention we talked to Raphael Bostic on Friday?
Did you? In Atlanta.
We asked him about what Anna was talking about, and he said he thought that they would hold rates where they are, which is 5.5% at the top range, until the second half of next year. He thought in the early part of the second half of next year, if inflation continues on the same track it's on, is when they could start considering the idea.
Now that's new, isn't it?
Rates. It's more specific than some Fed people have been. Jay Powell ducks that question all the time. I've said they're in the Potter Stewart camp of I can't tell you what it is, but I know it when I see it.
Right.
Decision. So I suspect that you'll hear more people start to talk about that. They have, and I'm sure Anna knows because she worked there, they've modeled out what they think the impact of these interest rates is going to be on inflation. So they have some good ideas about where they think they'll be able to go. They just have to get the economy to cooperate.
We had, Matt Miller and I had Cam Harvey, finance professor at Duke University on last week, and he says he thinks the Fed's just a joke because they look at old data and if they looked at current inflation data, inflation's actually whipped. It's done. And for that reason only, they should not only stop raising rates, but also start thinking about lowering rates.
I actually would not be surprised that if the Fed cuts sharper than what they indicated so far. I thought the bond market pricing of about 100 bips of cuts is actually reasonable. And the reason why is the Fed is already undershooting or they are too optimistic about the unemployment rate. We saw last week already the unemployment rate is at 3.9%. The Fed is forecasting 3.8% for the fourth quarter, and it only will peak at 4.1% next year. Now we see the unemployment rate about to embark on this trend, persistent increase. And so if unemployment rate does exceed 4.1% next year, the Fed will be slashing rates really fast, I think.
And we did just see unemployment come up, to 3.9 last week. Anna, what's your view in terms of how high unemployment's going to go at the peak?
Yeah, so surprise, we are actually considered by some people as a soft landing because we actually only foresee unemployment rate to peak at 4.7%.
Only 4.7.
Only 4.7,
Okay.
and by some standards, it's actually a soft landing. Most of Wall Street is expecting the unemployment rate to peak at 4.4%. So typically, after that threshold of unemployment increase of 0.5 percentage point, it will continue to climb up for another 1.5 percentage point. So a typical recession would actually see unemployment rate climbing to at least 5.5%. And so that's, by some definition, that is the true definition of hard landing.
What did we see in the market last week, Michael? I mean, we saw just rates come down really sharply. Stocks actually went up for each of the days last week. What did you see in the marketplace, or what did you hear in the marketplace?
Well, I saw, I put out a chart this morning that was sort of encapsulated. Over the last 30 days, you had this incredible peak in market interest rates. The world was coming to an end. And then 2 weeks later, after the supply and the Fed goes on hold, the interest rate just collapses and the world's coming to an end. This is why the Fed looks past this stuff, because there is so much volatility in the markets. And then I wake up this morning, we have this great Bloomberg story about how much of this decline in interest rates is due to a massive hedge fund short. And when the Fed suggested that the terminal rate is going to be about where it is, then everybody who had priced for continuing interest rate increases had to get out. And that's the reason we saw the speed with which everything declined. So if you're at the Fed, you're looking at this and you're going, hedge funds. Hedge funds. We can't predict that. We can't control that. When David Weston interviewed Jay Powell, Powell said, well, things are just the market's going to work itself out. And that's all they can do at this point, is let the market work itself out. And as long as, I always like to say, as long as the check clears, as long as the fail trade rate doesn't go up, the Fed isn't going to be overly concerned, because the market is working. Yep. And then it's just a question of price. And if the market works, it's not their fault if you got to pay more.
So, Anna, what's the next big data point that you're looking at to just get a sense of maybe where this economy is heading over the next 6 to 12 months? And I'm just not sure what they're really focused on now.
Well, we will be looking at the CPI next week and also retail next week. So if we are right that consumption is on track to slow down significantly, in the fourth quarter, you would be seeing a very low retail number next week.
You know, Mike, I wanted to come back quickly to your interview with Mr. Bostic.
Oh, yeah.
Right, him.
There was one.
Mr. Raphael Bostic, the Atlanta Fed president. You know, because he's kind of been more emerging as this longer-term dove on the committee. He's long been saying that, you know, rates are at or near the peak. He's he's been more the outspoken ones that policy is sufficiently restrictive. And I wonder if he's more the person that we need to be looking toward of where the committee is heading, because in the, you know, when we were in the midst of the hiking cycle, that was Mr. Jim Bullard of the St. Louis Fed, who's now on to bigger and better things. But I wonder if it's now Mr. Bostic who's leading us.
Well, he's influential, but I don't think he's leading the committee at this point. I think the committee is largely coalesced around a center that isn't too far from what Bostic is saying. Because remember, what they were talking about is maybe one more 25 basis point move. And of course, if we got a big jump in inflation, all bets are off and everything changes. But for right now, everybody's kind of about in the same place. I think I would watch somebody like Chris Waller or even John Williams, who would, as the sort of the premier economists on the board, would have more to say about where they're going. But you're right, we don't have Jim Bullard anymore. We don't have him as kind of
what a fun guy he was.
As kind of the guy who would come up with this weird idea, and then everybody would follow him on that.
All right, Michael McKee, thank you so much. We appreciate that. Michael McKee, international economics and policy correspondent for Bloomberg News. Anna Wong, chief U.S. economist for Bloomberg Economics, both joining us here in our Bloomberg Interactive Broker Studio. That must have been fun for you.
I think I'm done for the next 3 hours. Yeah, I'm good.
I mean, how good is that to have a couple of these smart folks in the room? We got still a little bit of green on the screen. I'm calling it unchanged in honor of Lisa Brown, which she hates the term unchanged. So we're going to go with that this morning. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
321 on Wall Street. Stocks higher in this update is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit Glenmead.com to learn more. The Dow, the S&P, NASDAQ in the green, but stocks are struggling to gain much traction. We've got 38 minutes to go until that closing bell clangs on Wall Street, with the S&P up 3 points right now at 43.61. That is a gain of 0.1%. The Dow holding on to a 20-point gain, little changed, up less than 0.1%, while NASDAQ is up 21, higher by 0.2%. 10-year yield 4.63%, with a 2-year 4.93%. We have got spot gold down $12.50 the ounce to $19.79. Decline there of less than 0.1%. West Texas Intermediate crude up 0.6%, $80.96 for a barrel of WTI. Traders are betting that the Federal Reserve will start cutting rates next, but the inflation outlook does remain a major question for policymakers and traders. Veronica Clark is an economist at Citigroup Global Markets.
We think we're going to get some pretty strong underlying details of upcoming, 3 or 4 months of inflation data. It could look pretty uncomfortable maybe early next year. It just doesn't look like inflation is sustainably slowing at this point. But I think as you're leaving rates high for a while, at some point that should matter and should slow things down.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Big tech leading the way right now. Apple up 1.4%. Amazon up 0.6%. Alphabet shares up 0.6%. Meta Platforms higher, little changed, up 0.2%. Nvidia right now up by 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Molly Smith, Paul Sweeney. We are here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube, so head over there and check it out. I want to talk about the Walt Disney Company, Molly. A company and a stock near and dear to my heart. I've covered the stock for over 30 years. It is at a place in time that they've never found themselves in. They're really trying to figure out, they and all the media industry trying to figure out how they manage this pivot to streaming and away from the traditional media distribution bundle that was so lucrative. And then I got some changes at the top here. Chris Palmieri joins us. He's the entertainment editor for Bloomberg News. He joins us on Zoom from our LA bureau, and it is a awesome office out there. Yeah, the last one they had was not great, I have to tell you. But this one is smoking. It's in...
What's so great about it?
Oh, it's in a great part of town, Century City, right, Chris? And you got smoking offices. Yep. I think you overlook the Bel Air Country Club or something.
Correct.
Yeah, it's just cool. So
a Los Angeles Country Club.
Los Angeles Country, major upgrade. So when I went out there the first time, I kind of talked to somebody back here in New York. I said, we need to upgrade our friends out in L.A.
Yeah.
And then they did. And it
sounds like a missed opportunity that I did not get there when I was there for 48 hours last week.
Chris, talk to us about Walt Disney here. They're getting themselves a new CFO. What do we know?
Very experienced executive, 3 decades at Pepsi, where he's done a lot of businesses, run their e-commerce business, ran the Quaker Oats business in North America, has obviously been the CFO since 2010, done mergers and acquisitions, been the face of the company to the finance community, is known for being sort of conservative guidance and over-delivering on the financial targets. So just a real experienced hand at a time of great turmoil, as you mentioned, at Disney.
Yeah, I'd love for you to tell us a little bit more about that. And this is Hugh Johnston, who we were talking about, if you didn't get his name. That's who the CFO is at Pepsi right now, who's coming into Disney. So, Chris, tell us a little bit about the board right now at Disney at the C-suite level. That we have the CFO who vacated due to medical absence, I believe it was. And what's going on with Bob Iger? How much longer is he going to stick around at the top?
Well, of course, brought back now 1 year ago after the tumultuous reign of Bob Chapek. And Bob Iger, known historically as a steady hand, has had his own shaky first year back. there's really so many things in the air, and I think that's one of the things that he'll have to address on Wednesday when they do the earnings call. We've reported they're potentially selling their India media business. They've announced they're going to buy back the one third of Hulu that Comcast owns, so a potentially $10 billion deal. Iger's talked about selling their traditional TV channels like ABC. He's looking for a strategic partner at ESPN. There's so much going on outside of the normal course of business there. So, they obviously need somebody who can talk to the financial community and help raise money and all that.
Hey, so Chris, you've covered the Walt Disney Company probably as long as I have. You're right out there in LA. You're in right where the entertainment industry really lives here. Talk to us about kind of where are they on the actors' strike? That seems like something that should be a quick fix relative to everything else that this industry is facing.
It certainly seems like we're very close on settling the actors' strike, but we've been hearing that for a couple of weeks now. Bob Iger's been personally involved in both with the actors and the writers. He's one of the quote big four studio executives that's been in the room, or at least on Zoom during these negotiations. It seems like the actors are going to get a pretty good deal. Not everything they wanted, but sizable increases in pay. And so we're all just sort of awaiting when that news comes and if there can now sort of pivot to salvage the TV season, which was supposed to start in September and now is earliest maybe in February.
So tell us then, Chris, given all of these things that you just mentioned, we've got the actors' strike, we've got the new CFO coming in. There's also, the potential sales of certain units or buying back some other ones. How's the analyst community sizing up Disney's earnings? You said we've got that coming on Wednesday, I believe.
Surprisingly, given all we talked about, I think it's actually supposed to be a good report.
That is surprising.
There's been a lot of cost cutting at Disney this year. Remember, 7,000 layoffs. All of these media companies have been surprising, both because of cost cutting and the fact that there's no production going on. They're saving a lot of money on those TV shows and movies they would otherwise be spending money on. And of course, everyone will be looking at the streaming business and how big the losses are, if making any progress in reducing that. Disney had said they're going to break even by next year in that business, which has just lost billions of dollars over the recent years.
Yeah, Chris, I mean, again, you're right out there in LA. You go to all the cocktail parties with the power players. They've got to be really scared. I mean, because they just don't know how their business is going to evolve. It was such a good business where everybody made money. The cable companies made money, the programmers made money, the advertisers made money. Now this streaming model has really upended all the economics that a whole couple of generations of people have kind of grown accustomed to out there. What's the feeling out there in terms of angst?
It is anxious. It's funny you mentioned cocktail parties. I went to an event at the LA County Museum on Saturday night, and Bob Iger's wife Willa Bay is on the board, and we kind of expected it's literally right next door to the SAG, the Screen Actors Guild building, too, to put it all in context. We just assumed he's been there. He was going to be there. He's been there in the past. Did not show up. So whether I shouldn't read anything into that, but definitely everyone was talking about the strike. It's a big deal, and everybody just really wanting to return to work. There are shows that are just waiting to get restarted, and we're seeing it in what we watch too. I mean, there's reruns that are now the hottest shows on Netflix. Movies are getting postponed in some cases by years. So it's really, you're beginning to see the impact.
Chris, I wanted to come back to Hugh Johnston here for a minute, the incoming CFO, longtime executive at Pepsi. My first thought, and maybe this is a bit elementary, but maybe if I'm thinking it, someone else is too. This is a guy who's working at a company who's famous for soda and snack food and, more like consumer discretionary goods of that nature. Like, what does or consumer staples rather, but I mean, how does that then work for him coming into a company that is so vastly different than that, obviously still in the consumer space, but on the media side of the business? And if he could be potentially a CEO candidate down the line, does he really have the background that Disney might be looking for?
It's an issue. I'm old enough to remember John Scully coming from Pepsi to Apple, and it was not a great run he had there. There's some interesting echoes here. At Pepsi, they also faced a sort of proxy fight with Nelson Peltz, the activist who's now also active in trying to get board seats at Disney, so that may come in handy. If you do some research, you'll find that when Hugh Johnson joined the Twitter board a few years ago, there was a lot of commotion because it was the first time he actually signed up for a Twitter account. So yeah, does he have the media experience to lead one of the largest media companies in the world? No, it doesn't seem that way. But as we were talking about earlier, he is a very seasoned corporate executive with a lot of experience in consumer products.
All right, Chris, thanks so much for taking the time. Appreciate it. As always, Chris Palmieri, he's the entertainment editor for Bloomberg News, joining us on Zoom from our LA bureau in Century City. Again, a great office there. But again, Disney, it's going to be really interesting for their earnings because they have so many questions, as Chris was just talking about, so many challenges ahead of them, as do most media companies. And investors are just like, I can't really own your stock in size until I get a better sense of where your industry is going.
I mean, you've got a feel for this, Paul. Like you said, you covered it for more than years than maybe you'd want to say aloud. But
I'm glad that I'm not covering it or having to come up because I just don't see it. I don't see a clear path for this industry, at least not right now. So we'll have to see how it plays out. All right, right now, let's head down to Washington, D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. Former President Donald Trump has finished his testimony in his civil fraud trial. Today, the judge threatened to excuse Trump as a witness for filibustering on the stand instead of answering questions, at one point telling the former president this was not a political rally. Former Assistant U.S. Attorney for the Southern District of New York, Jim Zirin, spoke with Bloomberg about Trump's outbursts on the stand.
A witness has to have respect for the court and respect for the process. And the judge is the boss in that room, not Donald Trump, not anyone else. If he has some disagreement with the judge's rulings, the remedy is to take an appeal. But the remedy is not to go into these political rants.
Former U.S. Attorney Jim Zirin speaking earlier with Bloomberg Sound On. While Donald Trump was again in court, Joe Biden was again touting railroad modernization. Today, the president spoke at Amtrak's maintenance yard in Bear, Delaware. We get more from Bloomberg's Irv Chapman.
The president announced a commitment of $16 billion to the Northeast Corridor, which would also benefit Metro North, New Jersey Transit, and Maryland's MARC commuter lines.
The largest investment in passenger rail since Amtrak was created 50 years ago. And that includes the largest investment in the Northeast Corridor since the Pennsylvania Railroad laid down these tracks in 1850. So when I talk about how badly the Northeast Corridor needs upgrades, you don't need to tell me. I've lived it.
The president then went to the airport. He commuted to Washington on Amtrak for decades, but the Secret Service won't let him take the train now. In Washington, Irv Chapman, Bloomberg Radio.
The men's college basketball season tips off today. Defending national champs UConn will begin the season at home against non-conference opponent Northern Arizona. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ higher. For now, little changed on the S&P 500 index. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks quiet in a choppy session today. The Dow's currently up 8 points. S&Ps are higher by 2. NASDAQ climbs by 20. The U.S. 10-year yield at 4.66%. Gold is down 12. Oil trading in the green, and Bitcoin is higher by 0.8%. Among the main 11 S&P sectors, leaders were healthcare and tech. Real estate and energy were under pressure, and leaders to the upside in the Dow, Amgen and Apple, while Disney and Caterpillar led to the downside. In deal news, Hilton is going to buy Blue Green for $75 a share in an all-cash deal. And after earnings, Dish Network fell 36%. That's the most on record, to its lowest level since 1998. Wrapping things up, some of the names reporting after the bell tonight include Diamondback Energy, Diamond Offshore, and Ring Central. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much for your appreciate it.
Turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, Molly Smith, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Don't know about you, Molly, but last week felt like peak rates to me. And I know nothing about that, but it just felt like peak rates to me when I saw
Yeah, the Powell pivot. That's what we're talking about.
I don't know. We'll
It
see.
could be the end.
Let's talk to somebody who actually gets paid to do this. Liz Young, head of investment strategy at SoFi. She joins us on Zoom from New York City. Hey, Liz, what did you think of last week's action in the markets? Again, just to me, it kind of felt like peak rates, both in the bond market, and I looked at how the stocks were moving. And how did you view it?
Well, first of all, it's difficult to call a peak really in anything, so I won't do that because it's a real easy
You're
way to
smart.
be wrong.
I do it for a living. So.
It certainly does feel like we went down very quickly, and it would be difficult to pop all the way back up that quickly. So last week's action I would take, obviously it was a strong week in the markets. Last week's action I would take as a bit more of a relief rally. I know now we're in this debate of whether or not it's a bear market rally or new durable upside, but I would take it as a relief rally. And I think the market interpreted what Powell has said and what went on in the jobs market on Friday as an indication that the Fed does not have to go any further, and interpreting that so far as reasonably positive. The problem with that interpretation is, as Powell has pointed out, and as I think all of us do know, that there are still some effects that are in the pipeline waiting to come through the rest of the economy and certainly come through the capital markets. So I don't think we're in the clear yet, but I do think that there's been some relief in the market on the expectation that we may actually be done with the hiking cycle.
Not in the clear yet, Liz, as in there still may be another hike. Is that what you're suggesting?
Not necessarily. I mean, so first of all, I don't think the Fed is going to declare the end of the hiking cycle. They really can't do that, especially with inflation still as far above target as it is. So they're going to leave the door open no matter what until we get closer to that 2% target. And they continue to reiterate that 2% means 2%. And I think that we should listen to them until that changes. And I'm not sure that it will change. So when I say not out of the clear yet, I mean that if you think back through this hiking cycle, we know that it's been fast and furious. We know that it went really, really far. But we even think back and forget that we had 75 basis point hikes. We had 4 of those in a row, and then we had another 150 basis point of hikes after that. I do not think that all of the effects of those have come through the system yet. So that's what I mean by in the clear. I still think that we're going to see some credit tightening. We obviously have this tapering program that continues to go on, and we're waiting to find out if companies are going to be squeezed by borrowing costs as they try to roll over their bonds. So I don't think all of those questions have been answered yet, and getting through, earnings season that has been maybe a little better than average, but we have a market that's been punishing companies even as they beat earnings. So that's why I say I don't think sentiment is quite all that positive yet.
That's kind of where I wanted to go, Liz, just kind of earnings. As a former equity analyst, I do pay attention to what these management teams say, particularly on their guidance. And while a lot of companies have, I guess, beaten on their quarterly numbers, almost to a company, they seem quite conservative on their outlook. And I guess that's prudent given where we are, but what level of concern does that raise for you?
Well, I mean, I think it's good that companies are being prudent, and that's really been what's gone on throughout this earnings season, because some of the numbers have disappointed, but the numbers have not been all that bad, and it's possible that we're going to have the first positive quarter of earnings growth, which would technically take us out of the earnings recession. The issue is that the guidance has been soft, and investors are now in a place where I think the tone has shifted. So for the quarters before this, the bar was really low, and it was easy to jump over that bar, and companies got rewarded for jumping over that bar. Now we're in a place where the bar is higher, and the expectations for fourth quarter earnings and 2024 earnings are pretty lofty, and investors are hoping that companies can prove that those can come true. The guidance has been soft and probably a little disappointing versus what people wanted to hear from CEOs about the following 12 months. So I think it's good that companies are being prudent. I also think that we need to remember, yes, it's good that inflation has come down, but it also means that pricing power likely comes down as well, and that revenue comes down for some of these companies because they cannot pass that all through anymore.
Something I wanted to ask you about, Liz, is looking at financial conditions. Obviously, it's a wide-ranging term of what the Fed looks at in evaluating how effective its policy is. And a story that we did last week going into the Fed meeting was about the tightness of credit spreads. And I wonder if that's something that you've been looking at as well, because to me, when I look at high-yield spreads now under 400 basis points, and to think that the Fed has been hiking rates, for the past year and a half, I'm a bit confused here. I mean, I'm hoping you can help explain this one to me.
Unfortunately, I can't. You and me both, a little confused by that.
What is going on here?
It feels like it's like watching a pot that you're waiting for it to boil and it's not boiling. I honestly am not sure yet. We've had a pretty big correction in the equity markets since the end of July, and spreads didn't really respond to that. A little bit, but not the way that you would have expected, particularly high yield spreads. So I think so far we've still got a decent amount of companies with attractive borrowing costs because they haven't had to do much with it. But I do think, again, back to those lags and the things that are in the pipeline, I do think as we go forward into 2024, we're going to hear more about that. The other thing that I would say about spreads in general and just credit that's available, if you look at the equity action in small cap stocks, one of the reasons that small caps are getting hit so much harder is because they are generally companies that are still trying to grow and they don't have enough capital to finance their own growth. So they have to go to debt and equity markets. Small caps continue to be under pressure and they can't find durable upside. I think that is a signal that the market is sniffing out small caps are going to be under pressure because of this higher cost of capital. Over time, as that affects companies in the debt market, I do think that you're going to see an increase in spreads.
On the equity side, Liz, what are the sectors that you're looking at these days?
This is going to be really boring, but because I am cautious, I think the sectors, particularly in the equity market, that investors can think about are consumer staples. I do think that utilities is an okay thing to have in the portfolio. I like energy. I like healthcare as, in the large cap space, a defensive play, but also kind of a growthy defensive play that's not quite as connected to interest rate moves as things like technology and communication. So those are the sectors that I would be looking at. I also think that there's still a decent opportunity in treasuries. I mean, yields have come down a lot in the last week or so, but there's still a pretty good opportunity. And these are yields that are higher than I've seen in my career. So, it's not necessarily too late either.
Very good. All right, Liz, thanks so much for taking the time. We really appreciate getting some of your insights. Liz Young, she's head of investment strategy at SoFi, joining us on that Zoom thing from New York City. So we appreciate getting some of her time here. Markets are pretty much unchanged for the S&P and the Dow. NASDAQ up about 0.1% here. So big moves last week, of course. A little bit cautious here as we start, a little bit calm here as we start the week. We'll have more coming up. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell, and we have got WeWork shares remaining halted as rumors swirl that the office sharing company, once valued as high as $47 billion, will seek bankruptcy protection. Ryanair Holdings is going to be paying out a dividend of 400 million euros, $430 million, and plans to hand over about a quarter of annual profit to shareholders. As Europe's biggest discount airline benefits from growing traffic, Ryanair's efforts to capture an even bigger slice of the market has been frustrated by Boeing's struggles to deliver aircraft because of supplier issues. And Bloomberg Radio caught up this morning with Ryanair CEO Michael O'Leary.
In our case, Boeing are contracted to deliver us 57 aircraft by the end of April 24. In other words, 57 additional aircraft for summer 24. At the moment, that has slipped by the Spirit production issues in Wichita, Boeing's own production issues in Seattle. I think now it looks like they'll leave us maybe 10 short by about the end of June. We're hopeful we get 45, 50 aircraft by the end of June. We've said to Boeing, we're not taking planes in July and August because frankly we're too busy. But we're reasonably hopeful that we'll get 45, 50 aircraft from them. They will leave us short. I think that's inevitable at this point in time.
And ADRs of Ryanair, they are up now by 4%. Number of C-suite departures today. PepsiCo's Chief Financial Officer Hugh Johnston will be leaving the company on November 30th. He's off to take the CFO job at the Walt Disney Company. And those are some of our top company stories at this hour. And this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, Molly Smith and Paul Sweeney sitting in for Carol Messer and Tim Stenivek here. So, Molly, there were a lot of people running around New York City yesterday. I don't know where they were running to, or whom they were running from, but what was going on?
It's all about the chase, Paul.
Okay.
You know?
The marathon,
Yeah,
right?
a little something called the marathon.
So people run 26.2 miles because they choose to.
Yes.
Okay.
I'm
got
under
it.
the impression it's voluntary.
Okay.
Unless there's some kind of bet. Who knows?
Now, you were involved in this to a certain degree.
Yes, let's clarify. I did not run the marathon, contrary to what a few people have asked me. Extremely flattered. Yes,
Right.
I have had a bit of an unprofessional running career. But no, I was volunteering at Mile 13. It was really a cool experience.
Where's Mile 13?
This was at Greenpoint in
Okay.
Brooklyn, so right before the Pulaski Bridge crosses
Okay.
over into Queens. We were handing out Gatorade and water and trying to dodge 60,000 people running into you and give them what they needed. And
Now, does most people take something to drink?
I would hope so. I mean, it was
Yeah.
fairly hot for running yesterday.
Right.
I mean, nice, beautiful day. I think what was the high? Like maybe 63 yesterday, which is kind of hot if you're running 26.2 miles.
And they don't stop and chat. They just run. They just grab it right out of your hand.
Yeah, I mean, the elites, yeah, sure. And plenty of other semi-pro people.
Right.
But there are definitely people who stopped, and I helped them fill their little water bottles.
Oh,
and,
okay.
You know, one of them said to me, like, oh, wow, you must be pretty hot out here. I'm like, why are you worried about me? I'm not running today. So
So
yeah,
did
it was
they?
a good time.
Is there just like a wave where, like, for an hour or two, you're just super busy, or is it kind of?
Yeah, a big stretch basically after the elite men pass by. So at that point, you've already seen the top wheelchair and the top female athletes. And then it's everybody else for the next, well, I don't know, 4 hours or so the rest of the day. So it was long.
How frequent are the stops, do you know?
They have every mile.
Every mile?
Yeah.
Okay.
So, yeah, got to stay hydrated out there. Get your fuel.
Yeah, nice. All right. Well, you
fun day.
participated. Volunteer. Did you get
You
to
watched?
Volunteer. I did
From
watch
afar?
it. Yeah. Volunteer hours?
Oh, yeah.
Oh,
8 of
yeah.
them.
Nice.
And I was there for all 8.
And that's big here at Bloomberg.
Oh, yeah, huge. I hit 50 for the year with that.
Very good.
So, yeah,
good
big,
for you.
Big day
All
for
right.
me.
All right, excellent. S&P 500 about to close it out here, but up about 0.1%. So a little calm after what was a very busy week last week. We're going to have more coming up. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. They're here to help take us beyond the bell. It's a global simulcast, joined now by our friends Paul Sweeney, as well as Molly Smith. We welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as our partnership with YouTube. I think we're having some technical difficulties with them, Scarlett. We'll connect with them in just a minute here. But, I mean, you talk about this idea that we're kind of through a big chunk of earnings season right now, right? That's over. So what's the catalyst? The Fed's over. There's no economic data this week.
There's a lot of Fed
Oh, you're
speak.
into the Fed speak.
I am when we need a catalyst, and Jay Powell will be speaking later on this week. But yeah, we've got a lot of data points to fill in before the next Fed decision. So it's true, we're looking for catalysts, and the catalyst at this point, as it's been for the last couple of weeks, is bond yields.
Yeah. Well, I'm glad you brought that up, though. But I mean, does this just continue to sort of drive the volatility? That if bond yields are up, then that means stocks are going to have to go down. That's the correlation we're talking about now.
Well, except it's not really happening today either.
Yeah.
So it's hard to pin it down. I think what's really fascinating, I love the question that you posed to Charles Lemonides, which was, are narratives still driving this market? I feel like we've been searching for a narrative. We've been looking for one. And when we can't find one, people are too eager to impose one on the market.
Yeah, well, certainly so, and that's
Like,
the problem.
for instance, yields have peaked, right? This idea, I mean, there's nothing reasonably that points out that yields have peaked, except that we wanted them to peak because it's a good talking point.
All right, I think we have our radio colleagues now tapped in here to their microphones here, and I'm curious, Paul, here what you thought of some of the price action today.
Yeah, it's interesting. I was just asking a couple of our guests earlier. It was such a busy week last week, both in terms of the bond market and then how the equity markets just followed the bond market, and so it just seems like today was just a calmer day. Everybody just kind of reassessing where we are after last week's big moves. That's what it felt like.
Yeah, of course, coming off what was, of course, the best week, at least for some of the major indices all year long. Not so much today here. You did have all of the major indices open higher on the day, but it looked like almost all of them spent a significant time in the red. The net effect of it all is basically unchanged on the day. The Dow Jones Industrial average higher by 0.1%, right around that 34,000 level. The S&P 500 up 0.2%, below that 4,400 level. The Nasdaq Composite up about 0.3%, right now camped out at 13,500 and change. And the Russell 2000 never really got any traction all day long, off the lows of the day, but still lower on the day by about 1.3%.
And when you look at market breadth, it's definitely to the downside. You have 344 stocks lower for every 158 stocks higher in the S&P 500. Looking at the industry groups, pretty evenly balanced as well. Tech, hardware, pharma, and household and personal products leading the gains there. And on the downside, REITs, energy, and diversified financials all lower by at least 0.8%.
All right, definitely some gainers out there today in the marketplace. First, Constellation Energy. This utility is higher after better than expected results. They also had EBITDA, taking their guidance up on EBITDA. So for a company that pays dividends, EBITDA is important. Eli Lilly, Chief Scientific Officer, said he is extremely optimistic that a major Alzheimer's breakthrough drug is coming. And Bloomberg's own Sam Fazeli, I believe, was at that meeting up in Boston. Booking Holdings higher as an analyst at D.A. Davidson upgrades the stock to a buy. So I guess people are still out there traveling.
Going to kick it off here on the decliners then, on the flip side of all of that with Dish. This is a rough day for Dish. Oof. Oh, boy, is right, Paul. Yeah, worst stock decline on record for Dish today after reporting a disappointing third quarter revenue and drop in wireless customers. That was a lot worse than what analysts predicted. We're talking they lost 5 times as many mobile customers as what analysts had set out. So Dish now had, the shares were down 37%. A record one-day drop.
And we should point out EchoStar, which they're merging with, was also down 30% here on the day.
Yeah, guys, I followed Charlie Ergen's companies for 30 years, and he was just money. But he's the last 7, 8, 9 years, he's made this bet on Spectrum, and it has been the wrong bet.
Very painful to watch that one today. Shifting over to then Paramount Global, another one that did not have a great day today. This one was a slide of down, ended the day down around $12 after B of A, and this was an analyst that you know well, Paul.
Jessica Reif. Yep.
Right, yeah, one of the biggest media analysts in the industry, that she cut Paramount Global down to underperform from buy. That's a double downgrade. Doesn't see a good pipeline there for asset sales. Last one I was looking at today.
And I just point out, too, I mean, she was very specific, though. I mean, she kind of singled out BET and Showtime and really just asked the question as to why. And she seemed to imply that there have been offers on the table. I don't know if we ever got official confirmation from Paramount. But if that is the case, it does raise the question as to what they saw and why they felt they had to pass.
Yeah, that's a good point. I'm not sure that we had that as well, but I also got that impression. It was a bit vague as to what exactly isn't she seeing? What did Paramount possibly pass up on? That I don't know, maybe a little bit of some knowledge there that she's privy to that maybe the rest of us aren't. And the last one that I was looking at on the decliners today, this is Solar Edge. It's gotten a lot of downgrades lately. Wells Fargo, the latest of which on the solar equipment supplier in the wake of a weak revenue revenue forecast last week. So one of the biggest percentage decliners in the S&P 500 today.
Let's take a look at the yield space scores because that drove a lot of the broader market price action. Yields higher all across the board here on this Monday afternoon. Coming across, of course, we talk about the big week that stocks had. We should point out last week was also a big week for treasuries, at least for the benchmark 10-year yield. That was the best performance on a price basis that we had seen, I believe, going back to March of this year. But that is now being sort of clawed back in a pretty big way. 9 basis points lower on the 2-year, about 8 basis points lower on the 10-year here. And of course, a lot of concerns right now, guys, about treasury supply. Another busy week for auctions. Of course, we have a 3-year, a 10-year, and a 30-year auction all taking place over the span of the next 3 trading days.
All right, we also have some earnings. It's as we've been talking about, most of the big earnings have come out, but we do have numbers out of TripAdvisor, and the third quarter numbers do beat analyst estimates, whether you're looking at revenue or the bottom line. Revenue of $533 million, better than the expected $505 million that analysts were anticipating. It also was an increase of 16% from a year ago.
Yeah.
Adjusted EPS of 52 cents also beats the consensus estimate as well by 6 cents. Analysts were looking for 46 cents. So TripAdvisor right now up about 3% in first trading.
You know what I thought was interesting? There was an interesting upgrade earlier today on Booking, Booking Holdings.
Yeah, Paul mentioned
and the analyst over there, over at D.A. Davidson, was talking about this idea of discretionary spend and how, yes, overall it may be going down, but at least in their view, the idea was that we were going to see more of that spend to travel, that was going to be, they were going to sacrifice other discretionary items, other discretionary services in favor of continuing to travel.
I mean, you've got to then, from the economic lens, because that's, of course, the way that I'm going to look at this and see, if TripAdvisor's up and we're looking at what's, pretty good outlook for them, and I'm hearing all these reports of that the consumer is about to have its worst fourth quarter, kind of hard to square those two, isn't it?
Yeah, I'm going to be looking at the retail sales coming out up shortly, as well as earnings from the retailers coming up. They're always kind of the tail end of the earnings cycle, but that'll give us a good sense of where this consumer is.
Yeah, and it gets also to the point, too, the idea that if there is sort of material softness here, when does that start to trickle into some of those sectors that I think had held up pretty well here, whether we're talking about consumer travel or some of the other services that we talk a lot about on this show, Scarlett. I mean, what's the breaking point?
Yeah, well, I mean, I think when you get to retail and especially apparel companies, that's where the rubber meets the road, whether people are going to continue spending on items that have only gotten more expensive given labor costs, given material costs, given shipping costs.
I know. I mean, here we are, folks. It is November. It is holiday shopping season. So, I mean, I want to really hear from the retailers about what they think about this holiday season, because as we all know, that makes or break the year for most of these retailers.
Yeah, and so far, Paul, the outlook has not been that great. We were looking at the biggest U.S. toy makers not too long ago in the last couple weeks, those really bad outlooks coming out of Mattel and Hasbro, and the hiring, too, that we've seen in the job space of things, that the seasonal hiring announcements really slow so far this year. So that's also not adding to such a festive mood going into the fourth quarter.
Yeah, sorry. I mean, we're talking about retail, I guess, to some extent. I just saw this cross the wire here. This is on Overstock or Bed Bath & Beyond, whatever we're calling it right now here. We had learned earlier in the day that they appointed a new interim CEO and president. Now we're learning from the company here that the board had asked Jonathan Johnson to step down as chief executive officer. Now, it doesn't exactly say why here, but an interesting moves. We were just talking a little bit earlier on the TV program with Scarlett and Katie about some of the C-suite changes, whether it's over at Pepsi and Disney or over at, Bumble, which I know you're a big fan of, Paul.
Sure.
And then even over there at Dish with you mentioned Charlie Ergen, but of course this new tie-up with EchoStar, they've sort of just picked, I guess, the current president and CEO over at Dish to helm that combined company.
Yeah, that's going to be a tough one. I mean, it's a Charlie Ergen play. That's what investors are betting on, but there's a lot to prove there.
Yeah, all right.
How much room does whoever's taking over have to do anything when Charlie Ergen's kind of overseeing the entire enterprise, right?
Exactly, and investors are just betting on Charlie, listen to Charlie's every word, and so far he has not been able to monetize all that spectrum he bought over the last 6, 7, 8 years, and that's a real problem.
All right, always great to have Paul Sweeney on with that type of knowledge there, and our thanks to Molly Smith. That does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. And a reminder, Bloomberg Business Week is now on Bloomberg Originals. We'll be back with Paul and the rest of the gang there in our radio studio, same time, same place.
I mean, and so he does it, and all these insurance people, Warren Buffett followers, they set it up their day to follow it. And one of those people is Matt Palazzolo. He covers all the insurance stuff for Bloomberg Intelligence. He joins us live here in our Bloomberg Interactive Broker Studio. We appreciate that. He got the memo about 4 days a week. What did we learn from Berkshire Hathaway from the earnings announcement, maybe kind of what we heard from Mr. Buffett?
Yeah, so headline, big gap loss.
Okay.
That is because that's accounting convention. They run the changes in their equity portfolio through the income statement. So Apple had a bad quarter, so you see this top line number come through. I think it was like $12 billion. Do
I look at the A or the B stock? What should I look at?
Either or. They move in tandem.
Okay.
So headline loss there, but the operating company earnings up like 60%, and that was mostly on the insurance segment. So the insurance segment rebounded, had a bad quarter in the year ago because of Hurricane Ian. This quarter you saw reinsurance, underwriting booming, interest income booming. You guys were just talking about the consumer. Their consumer businesses actually did a little bit better. I'm an insurance guy, so it's not exactly my forte. The top line was down like 20% for that business in the second quarter. So I expected it to be down again, but it actually wasn't. So that was kind of a positive surprise, but maybe it might not look so good going into the fourth quarter.
And just tell us, Matt, because Berkshire is such a massive conglomerate of God knows how many businesses, what exactly is the consumer business?
So they manufacture consumer products. I don't have them all in my head. And then they sell consumer products, so retail and sales. So, interestingly, they just acquired with the Allegheny business was Jazzwares, which is a toy maker.
I know the Allegheny company very well.
When I told my kids that this company makes Squishmallows, they were over the moon, like it was the best thing ever. So perhaps that'll bode well going into the holiday season.
All right, cash. They got $157 billion in cash. What are they going to buy? I mean, we've been asking this question for a long time.
A while.
But now the interest rates are up. I'm sure shareholders are not as concerned.
That's exactly right, Paul. So, they have a problem I wish I had, is they generate more money they can actually spend.
It's a good problem to have.
Yeah, my wife might test it out on Amazon Prime if we did, but they're just generating more money than they know what to do with. The great thing is the rise in interest rates, especially in the short end, has helped them a ton. They were earning about $50 million a year in interest income. Now they're earning over $5 billion.
Wow!
Just on interest on their cash.
So that's a model.
That's great. I mean,
why is the stock not ripping on rates then?
It doesn't last forever. I think it was honestly a little bit of a surprise to me that they benefited that much from it. I guess we could have seen it. Maybe people were expecting them to do something with that cash, but they keep it liquid, and that's been okay. It won't be if we start going the other way, obviously.
Yep.
Have there been whispers of what Berkshire could possibly buy? Like what deals might be out there? I mean, like we just said, this is a massive company, so many businesses they're already involved in. Like what more do they possibly need?
So my big thing is I really thought they were going to buy Occidental. It seemed out of their playbook the way they were approaching it, taking kind of little snips. Buffett was very positive on the management publicly, which is things he'd done before. Then at the annual meeting, they came out and said, we have no interest in owning this entire company. Then Chevron became one of their biggest holdings. And I thought, okay, so they're big energy players. Maybe it's an energy business. They've paired their holdings in Chevron. I don't know. I think it's going to be something we never heard of that they end up buying.
Do they buy non-U.S. companies in size?
They haven't. Buffett made some investments in the Japanese trading houses, and that was... I forget the exact number, but it was in the billions of dollars. Right. They didn't acquire them. They just bought the stocks of them. And they have some businesses with foreign operations, but they usually stick to the U.S.
What Tim Craighead of Bloomberg Intelligence, explained to me years ago about the European stock index. It doesn't have a lot of tech, okay? What they have is they make stuff over there in Europe, German, like Siemens, and they make big stuff, equipment and everything. That seems like a play for a Warren Buffett. Go buy a big machine company or something.
I wouldn't be surprised. I mean, one of their biggest companies is Precision Castparts, which makes precision parts for airplanes, right? And it's just not something that much about or hear about. That actually did pretty well in the quarter, too. But it's got a monopoly on these kind of unique parts that no one else can make. And I think those are the companies that they look for.
So if I'm a stockholder right now in Berkshire, do I want to see the company buying back stock or giving me a bigger dividend? Like, what do you think when you see all this cash?
I think the market would love a dividend. I don't think they're going to do that as long as Warren Buffett's around.
And just go back. That's a great question. Why don't they do a dividend?
I think Buffett likes getting dividends. He doesn't like paying dividends. I think he always assumes he can do something better with the cash.
Okay, but that's now been proven beyond a doubt that he can, because there's $157 billion in cash. Did they buy back stock?
So they buy back stock. Historically, they were not big repurchasers either. What happened in COVID? The stock dipped, and they really started buying in mass. They were buying like $6 billion a quarter at one point. There's some limitations with the A and B shares. They can only be so much of the volume, but the share repurchase has gone down. It was like $1 billion for the past 2 quarters, which obviously is a lot of money, but not for them. Yeah. And it was honestly disappointing. I would have loved to see them buy back more.
All right, let's have a broader insurance conversation.
Shall we?
Who doesn't want to do that?
Please
Everyone
do.
does.
What are the big drivers? A, how are insurance stocks doing these days? And B, what's the driving thing that you guys need to get smart on as analysts and investors?
So, I mean, interest rates are a big thing. So I cover the P&C names specifically. The life names are very much interest rate plays and move a lot with interest rates. The P&C ones...
Property and casualty.
Property and casualty, as we say in the biz.
Yeah.
They were in a play on inflation, so the cost of repairing things went up, so that increased their loss costs. Okay. But their prices have been going up as well. That's really on the commercial side. It's hurting the personal side as well. The thing is, these stocks haven't done that well this year. They did their defensive plays. The beginning of the year, they all took a dive on the regional banking disaster, which for no reason. There was absolutely no reason they should have felt in sympathy with them. We talked about it at the time. So they spent all year recovering from that. Just to bring it to Berkshire a little bit, Berkshire's outperformed all of them. So they haven't really moved like an insurance company this year. But so you want to get smart on insurance companies, it's rates, it's loss costs. We just came out of the third quarter. Things were actually better than I expected, and the stocks underperformed. I think they have maybe another year of peak ROEs. The valuations can peak before the ROEs, so there actually is probably room in those stocks.
And we haven't had any big hurricanes and stuff.
That was going to be my question next. Yeah, because you mentioned the Ian impact.
I'm going to knock on wood here.
So we had a bunch of weird stuff happen in the quarter, right? We had the Maui wildfires. We had we had the tropical storm hitting California, and these were they were odd events. Right. The Maui fires were very bad in the humanitarian aspect, and the insured losses were small for the industry. We haven't had a big event. We haven't had like a Hurricane Ian this year, and it's allowed these companies to build capital. But things have been worrisome. Even this, there was a big hurricane in Mexico, Otis. And I looked at it, and my just kind of very initial blush was, okay, it's not going to be big for the reinsurance community. It might be big for the domestic market. It's coming out maybe at $6 billion, which is a modest industry loss. Again, it's probably going to hit a lot of the Mexican companies. But if you look at the damage there, it was some of the strongest winds literally ever recorded. So we're kind of on the precipice of maybe something big happening.
All right. Matt Palazzolo, thanks so much. We appreciate it. Property and Casualty Insurance Senior Analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Brokers studio here, talking about the insurance business. Warren Buffett, $157 billion of cash on the balance sheet. What is he to do with that? That's kind of the big question that investors have been asking. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. It turned out to be an up day for the Dow, the S&P, and NASDAQ, extending last week's gains, but stocks struggled to gain much traction as bond yields rose, with traders betting that the Fed will be leaning against the reason easing in financial conditions by saying it will keep its options open on policy. 10-year at 4.63%, with the 2-year 4.93%. The Dow, the S&P, NASDAQ all advanced today. S&P 500 index up 7, back at 43,365. Gain there of 0.2%. The Dow up 34, up 0.1%. The NASDAQ Composite Index up 40, higher by 0.3%. Spot gold down $15 the ounce at $19.77, a drop there of 0.8%, while West Texas Intermediate crude gained 0.4%, $80.84 for a barrel of WTI. We'll have a lot more on the markets coming up with our global macro strategist, Vince Signorella. PepsiCo's CFO Hugh Johnson is leaving the company November 30th. He's been named the CFO of the Walt Disney Company effective December 4th. PepsiCo down today by 1.2%. Disney dropped 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so check us out over there. You can search Bloomberg Radio. Look out the window here, Molly. It's getting really dark. This is such a bummer.
You know, I'm embarrassed to admit this, but we're already going down the rabbit hole. I had no idea yesterday was daylight savings until like 5 o'clock at night. And I looked up that my analog clock and my iPhone watch said two very different things. And it was, I mean, crazy. The New York City Marathon is scheduled out on that kind of a day.
Look, that's a great Seinfeld episode.
It is, yeah.
He missed the thing, was it?
I was so stressed.
AM.
I had no idea.
Exactly.
Anyway.
There we go. All right. All right, this is my takeaway from last week. I think I saw peak rates, a couple of weeks ago, and I think the action last week, it made me feel like something's happening out there, that maybe it was kind of real, the movement we saw, but what do I know? So let's talk to Vince Signorella. He's supposed to know this stuff. He's a global macro strategist for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. We're not going to make a big deal about that anymore. So,
I am.
So, Vince, what did you take away from last week's action? 5 days of equity gains, yields pulling back pretty substantially. What did you take away from that?
I think Powell sort of punctuated the story when he gave the markets a very good hint that they may be done. And the key thing I took from his conversation was there was a great deal of speculation that the Fed would worry about their credibility should they stop and pause and then inflation come back and then they would have to start again. He made it very, very clear that the Fed had no problem pausing, and that if inflation came back, they were very happy to start it up again. And I think that signaled to the market that the pause is coming, that we're basically there, that he's comfortable with doing that. He's not worried about credibility, as in the transient story. They're fully prepared to pause if they see the right situation. And I think that situation is present. And they're very ready, if they need be, to start it up again. And that credibility isn't an issue, which the market was very concerned about. And I think the Fed was very concerned about. And so I think that's what the markets rallied on. I disagree strongly with Mr. Wilson of Morgan Stanley and Kalanovic of Chase. I think they've got it wrong. If you look at the technicals, they're very, very bullish signals coming out. And while the rally could stall going into year end, I think for sure it's here right now, and that they're going to miss it, at least in the short run.
Well, it looks like there was a bit of a stalling today. That's the headline that we've got right now, that Wall Street faces, quote, reality check after big rally. Is that the way to think about this? Maybe taking a breather?
Taking a breather. I wouldn't call it a reality check. I think what you're looking at is traders pairing some bets. We had a really big run, as you pointed out, both in bonds and in equities. I think you're just seeing smart money take something off the table, trimming those bets a little bit. The old saying on the street, as Paul knows, bears and bulls make money, pigs get slaughtered. And I think that's what we're seeing right here, is people not being pigs about it. And it's going to resume. If you do, I did a post on the MLive blog. It's not out yet today, but I looked back at Joel's data on a year-over-year change, which is one of the big things the Fed has been looking at. And if you look at CPI, and it's amazing how Joel's data have led CPI.
Have led it.
Yeah, and
The Jolt's being the lagging indicator, though.
Well, it's a lagging economic indicator, but it's led CPI.
Okay.
So if you look back now, Joel's job openings have been declining since January pretty much of 2022, and you've seen CPI follow. And we've had a little hiccup in CPI in July of this year, I think it was, but the trend is definitely coming down, and the jobs openings data is coming down. And that's a result of post-pandemic companies not having to post for jobs that they worried about weren't going to be there. And then you've got layoffs. Citibank again announcing something like 10% across the board layoffs coming. So the jobs numbers are starting to fall into the place where the Fed wants to see them. And I think inflation is following, and I think the rally will follow suit.
So how much of last week, if any, was the smart money that you talked to covering the shorts? A lot of folks were saying there was short covering. I know even Ackman was out with something,
I think more, not so much in the equity market, but definitely in the treasury market.
Okay.
There was, I think we saw it last week, CFTC positioning is still very heavy short in the treasury bond space. And I don't put a lot of street cred in the CFTC. It's a one quick snapshot in time. Whoever the guy was who sold that to the journalists of the world, bless him, he's one of the best marketers out there. The problem with CFTC data also is, you often use futures to hedge your cash position. So looking just at the futures and seeing massive shorts could mean there's massive long bond cash positions out there, and they're just hedging in the futures market because it's easier and quicker to turn than an actual cash bond position. So, that being said, the markets were very short treasuries. I think they still are, and I think that was what we saw last week in some covering of those bond positions.
So last week we saw treasury yields, or maybe it wasn't last week, but right before that, when 10 years peaked right around 5% on the 10-year yield, now down to 4.65. So it's pared back a lot, but what do you see as like the next catalyst for the treasury market here, and just generally the outlook of where these yields are going to settle?
Well, a lot of people are thinking that yields are going to go considerably higher still. That may be the case for 2024. We'll see. But
what would the reasoning be for that?
That the economy would pick up, that inflation would pick up, that we're not going to see the soft landing or the recession that everyone's talking about, and that earnings pick up.
So that re-acceleration idea rather than the soft landing.
Which is something the Fed has said they're prepared to address if it happens. I don't know that it's going to be that situation. I don't see the economy picking up as strongly as maybe some people think. I think we're going to kind of flatline for a while after the fourth quarter. I think we'll see some decent holiday spending. We always do. People will borrow against it, whether it be revolving credit or some layaway situation, or borrow from Uncle Mikey to get them through the winter and the holiday season. And then I think we'll see a bit of a stall early in the fourth quarter next year. First quarter, excuse me.
Powell actually made a point on this last week during the press conference, that he almost kind of insinuated that the economy can reaccelerate, as in you can have strong growth without there necessarily being a strong inflationary reaction from that. I mean, all being like from the supply side of the economy coming back on. I mean, did you kind of follow that chain of thought? He was kind of talking about, it was a little bit of a winded tangent. He was kind of going between real GDP and potential GDP, and might have gotten a little lost in the sauce there, but that was what it seemed to be what he was getting at.
Yeah, I mean, there's this idea out there that if you have global growth, then you have to have inflation. It's not true. We've seen it many, many times in the past, where you have this sort of Goldilocks scenario where the economy is doing well. You don't have any real pressure in wages, so there's no real pressure in prices. Companies are comfortable with earnings. They don't feel the need to pass those prices along, and there are times when they do, where there's pushback and consumers change their buying habits. And so you get that little bit of a Goldilocks situation where prices remain relatively steady, the economy is growing, earnings are doing really well. There's modest wage gains, everybody's happy, and it's a very, very possible situation that shows up in 2024.
And that's the no landing? Is that what we call it? I've gotten lost.
That's in the gliding, I think.
Gliding? Cruising?
We're cruising.
I like those. All right, how about the U.S. dollar here? We, obviously since July, it's had a big move higher, but obviously it was weaker last week.
Right.
What are you hearing from currency traders out there about good trades to put on here?
So the situation is everybody likes to look at yields in the dollar, and I wish it were that simple because I'd still be trading and made a lot more money when I was trading than I did at the time. Because it's, the dollar moves on so many things. It's not a one-off situation, but, yields do contribute. Global phenomena contributes. The Haven trade contributes with the crisis in the Middle East. But all that aside, one of the things that's held up pretty well is this inverted correlation between the S&P and the dollar. So if you believe the Mike Wilsons of the world that stocks are going to crash, the dollar is going to go up. If you believe what I'm telling you today, that I think we're in for a short-term rally, the dollar should be under pressure going into the year end because it's a risk-adverse type of trade. That risk-adverse trade where you would buy dollars isn't really there. So you'd move away from dollars into riskier assets, which would be equities and bonds.
All right, then. Well, I mean, I guess the last one I would pose to you then, Vince, would just be, the equity trade. I think a lot of people probably some open-ended questions there. So, what are we looking at for like year-end S&P, you think?
From one of the technicals that I'm looking at, if we can get comfortably above 4,400, we should close around 4,500.
Nice. I like the technical trades.
Nice round number.
It's an if-then thing.
No, I think we will. I honestly think we will. I think
I
4,500 is in the cards, but we need to get through that tough resistance at 4,400 first.
All right, Vince, thanks so much for joining us.
Thank
Vince
you.
Signorella, global macro strategist at Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Maybe our best dressed guest of the day.
Oh, no, that's a definitely.
No question about
Look
that.
at this collar.
Yeah, I don't know. It's styling.
It's popped.
Not everybody can pull it off, but yeah, he certainly did here. All right, we're going to have more coming up. S&P finished up today, 0.2%. Right now, let's head down to Washington, D.C. Look at World and National News with Nancy Lyons.
Thanks, Paul. Former President Trump has wrapped up his testimony in his New York civil fraud trial. He took the stand today after his two oldest sons testified last week. Trump today repeatedly sparred with the judge in the case as prosecutors pressed him on his financial records. Bloomberg News legal editor Tony Lin says very little new information was brought up during today's testimony.
He's basically said, they made these loans, didn't matter what these statements said, they all made money from it. So no one was really hurt. And he was throwing it back at the AG saying the only person who complained were them. And so that saying it was entirely a political prosecution.
Bloomberg's Tony Lin notes there was no shortage of courtroom drama, though. The judge got so frustrated at one point, he threatened to remove Trump from the witness stand. Well, the issue of gun rights goes back before the Supreme Court tomorrow.
The case involves a federal law that keeps guns out of the hands of people under domestic violence restraining orders. The Fifth Circuit Court of Appeals struck the law down as a Second Amendment violation. This appeal will be the first test of last year's Supreme Court decision to expand gun rights based on an originalist interpretation of the Constitution. Proponents argue there is nothing in America's history of gun regulations that resembles this federal law. The Biden administration contends there's other history to look to, including English law that allows the disarming of dangerous people. In Washington, I'm Nathan Hager, Bloomberg Radio.
Michael Bloomberg, founder of Bloomberg LP, donates to groups that support gun control. We're learning more about how the Biden administration's $14 billion aid request for Israel would be spent. U.S. officials who've asked not to be identified say the money would allow Israel to significantly expand its missile defenses, including new Iron Dome launchers equivalent to more than twice the current deployment. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We begin with a developing story based on reporting by our Ed Ludlow. SpaceX is on track to book revenues of about $9 billion this year across its rocket launch and Starlink businesses. Again, that's according to sources. Sales are projected to rise to around $15 billion in 2024. And again, sources tell Bloomberg Elon Musk's SpaceX on track to book revenues of about $9 billion this year. Those headlines breaking right now on the Bloomberg Professional Service. More details coming up as they become available. Turned out to be an up day for the Dow, the S&P, and NASDAQ, building on last week's surge. S&P up another 7 today, finishing the session at 43.65. That was a gain of about 0.2%. Dow Jones Industrial Average up 34 points today, higher by about 0.1%. NASDAQ was up 40 points, another 0.3%. However, stocks did struggle to gain much traction as bond yields rose. Traders are betting the Federal Reserve will lean against recent easing in financial conditions by saying it will keep its options open on policy. S&P up 7, up 0.2. The Dow up 34, up 0.1%. NASDAQ up by 0.3%. 10-year yield, 4.64%, with a 2-year that's yielding 4.93%. Gold down $15 the ounce to $19.77. That was a drop today of just about 0.7%, while West Texas Intermediate crude up 0.5%, 80.89 a barrel on WTI. Bottom line here, stocks extended last week's gains, a week in which the S&P 500 index advanced 5.9%. So what should investors read into that? Liz Young is head of investment strategy at SoFi, and she was a guest right here on Bloomberg Business Week.
Last week's action I would take as a bit more of a relief rally. I know now we're in this debate of whether or not it's a bear market rally or new durable upside, but I would take it as a relief rally. And I think the market interpreted what Powell has said and what went on in the jobs market on Friday as an indication that the Fed does not have to go any further, and interpreting that so far as reasonably positive.
Hilton Grand Vacations is buying Blue Green Vacations Holding in an all-cash deal for a total enterprise value of about $1.5 billion, including a net debt. Today we had shares of Hilton Grand Vacations, HGV on the ticker, down 8%. Shares of Blue Green up 107%. And that's Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Molly Smith, Paul Sweeney. We're live in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so check us out over there. You know, Molly, last week during the market trading, particularly in the credit market, looking at the Treasury market, it just felt like, well, I felt like I'd seen peak rates. And we saw, you know, the rally in the bonds and the yields come down. You know, look at the bank rate, 30-year mortgage, just for example. It was 8.03%. We're now at 7.79%. I don't know, it just felt like we hit peak rates. Yeah. And lo and behold, one of my favorite Bloomberg opinion columnists comes out with a column kind of asking the question, the tipping point from tight to what exactly? And that's a good question.
I hope he has the answer for us. It's a little open-ended.
Exactly. John Authors joins us here. He's a Bloomberg opinion columnist, joins us here in our Bloomberg Interactive Broker Studio. John, what did you think we saw last week?
Well, first of all, just to spoiler alert, I spent 2,000 words not quite answering my own question, which is as is my wont. Last week, I think we definitely got evidence that the world's financial authorities aren't prepared to let bond yields rip higher. They're not prepared to let the market make its own decision on where they go, because they do understand that those risks are severe. I think the last big spike, or the last big stage of this spike we've seen in bond yields came after Jay Powell spoke to our own David Weston and said, I think his phrase was, the market will play out. He really seemed to say he wasn't going to bless any particular level, and that frightened people, because he can't set the 10-year rate. Even Greenspan couldn't do that, but he has to be concerned about it. And last week, both the Treasury and the Fed plainly were more concerned to do things at the margin that would that would intervene to stop the rate going too much higher in an uncontrolled fashion. So that's unquestionably important new news that justifies quite a big market reaction. Whether the reaction that we've had, particularly after the unemployment data, which I think were overstated, that's easy for me to say now because the bond market move has been almost completely reversed today that we got after unemployment. Whether it's much more than, well, at least we know they're not going to let yields go completely ape without a fight. Whether it's truly that we've seen the peak, that is another question. If we have seen the peak, you want to be out of stocks.
Well, I guess that's the question that I have for you then, John, coming out of the Fed meeting last week, that there was, I mean, the statement was more or less identical to the one from the September meeting.
Very slightly more hawkish, I thought, but yes.
Well,
yes.
I think I guess you could say that. But I think
let's debate economic Fed policy. Let's go.
Shall we? I mean, the thing that I was going to reference that I think we were talking about on our crew was more the reference to financial conditions.
Yes.
That was really the big difference between the September-November statements.
Yes.
So how much of that then do you think is Powell and the Fed trying to, keep a lid, so to speak, on bond yields versus really saying that the hiking cycle is over? Or is it both?
I think it's more the latter. I think if they really wanted, they're bound to give themselves some wiggle room because they have to.
Well, because they've been right so many times.
Yeah, well, exactly. Had they could, if he really wanted to send up the dog whistle, send up the bat signal, no more rates hikes, he could have done so much more clearly than he did. So I don't think it was meant to really get the word out that rates aren't going any higher. It was meant to get out, we've noticed that conditions are getting tight, and that's what we want, but the mere fact that they're on that case suggests they understand that things can go too far, and the fact that, particularly in combination with what we'd had from the Treasury, that they didn't want yields to go ballistic. But I didn't myself think that he had put a lid on yields, saying that this was on the Fed funds rate, saying that this was the top, and nobody seemed particularly to react that way until, if we're really going to get into parsing the detail, until
that was my favorite activity. Please
go
on.
The last five. There was one Bernanke FOMC many years ago when they changed just one word in the communique compared to the previous meeting. They said "could yet" before they just said "could." And I wrote an 850-word column for the Financial Times about that one extra word, "yet." So these things happen. Anyway, there was that very strange interjection where he decided to tell us that we didn't need to worry about the dots.
The ones that the decaying efficacy of the dots. That was the line.
That was bizarre.
It was.
I've never heard such phraseology before. He didn't have to say it. I guess there's been no big attempt to retract it. So on the face of it, yes, that's a fairly significant dovish signal if he says we can ignore the last dots, which, by the way, were very hawkish, and suggested there'd be another hike. I mean, until that moment, there really was nothing there to really suggest that he was going out of his way to say, don't worry, guys, no more hikes. It was one of the weirder moments of central banking communication in my career, which has gone on too long for my physical and mental health already. That was very unusual. If that was the way he decided he was going to break it to us, that there were that he wasn't going to hike anymore. That was strange.
Right. Interesting. Well, certainly well received, I guess, to say the least, by the risk assets out there. John Authors, thanks so much for joining us as always. John Author, he's the senior editor for Bloomberg Markets, Bloomberg Opinion columnist as well, joining us live here in the Bloomberg Interactive Broker Studio. And as an Englishman, he likes the Boston sports teams. I don't get it.
Go figure.
I'm not sure what's going on. Looking at what we had in this market today, again, just to recap the market, S&P up about 0.2%, NASDAQ up 0.3%. We're going to have more coming up. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Sources tell Bloomberg SpaceX is on track to book revenues of about $9 billion this year across its rocket launch and Starlink businesses. Sales are projected to rise to around $15 billion in 2024. Our Ed Ludlow broke the story. He's got more coming up in just a moment right here on Bloomberg Business Week. Palo Alto Networks is buying Talon Cybersecurity of Israel in its second acquisition of an Israeli peer within a week. Palo Alto Networks today down 2.7%. Tesla is going to be producing a new model that will cost 25,000 euros, just about $27,000, at its factory near Berlin. This according to Reuters, as competition intensifies to produce more affordable electric vehicles for the European market. Elizabeth Berman is with Bloomberg News in Munich. She was a guest this morning on Bloomberg Surveillance.
There are a number of other car makers also really moving into this space, and like you're saying, these vehicles might actually be cool. So there is from Stellantis a Citroën that will cost around 23,000 euros. It'll be quite nice looking. Then there's Renault's Dacia Spring, and VW is coming up with a pretty affordable car from 2025 as well.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Tesla shares lower today by 0.3%. And those are some of the top company stories that we're following at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, Molly Smith and Paul Sweeney sitting in for Carol and Tim. As Charlie was just reporting, we got some very cool reporting today from one of our Bloomberg News folks. SpaceX eyes $15 billion in sales next year on Starlink strength. I had no idea what this business did or how they make money, but our next guest, he knows. Ed Ludlow, who's one of the reporters who broke this story. So, Ed, talk to us about SpaceX. What is it, and how do they make money?
Okay, so SpaceX is a space company. Shock, it's in the name. And it makes money two ways. Sending rockets from Earth into orbit and carrying a payload. Could be a satellite, could be human beings for NASA, into space, right? They ferry NASA astronauts to the International Space Station.
Okay, that's a business I know.
And it's the one you see on your TV screens. Right. It's very recognizable. The other business is Starlink. So what SpaceX has been doing for years now is launching its own proprietary satellites. There's thousands of them in constellation in orbit above the Earth. And it works very similar to like Viasat, in that it's a space-based internet. So all you need on Earth is a ground receiver. In the US, it costs about $500, and you pay a monthly subscription. And no matter how remote you are, if you got one of SpaceX's satellites above you, you can have high-speed internet.
So this is, you were saying to us before, Ed, if you're, maybe you like skiing and you're in somewhere high altitude, maybe not a great service connection, that this could be a good premium product for that.
Well, it's expensive as well, so that's why you're more likely to have it.
If you had this at ski home.
But what we're reporting, right, is that if revenues are on track to be $9 billion in 2023, that means they doubled sales overall this year. But the key point next year is as revenue accelerates for SpaceX towards $15 billion, it's what Elon Musk said would happen is coming true, which it often does happen, just not on the timeline he's outlined, right? And what I'm talking about here is SpaceX making more money from this satellite-based internet system than they make from launching rockets, but in a really big way. Like the majority of that $15 billion, it will be Starlink. And that's higher margin revenue as well, right? Because it's a subscription-based business after the CapEx.
This is a private company. How did you figure this stuff out?
Well, as we write about often in SpaceX, it's very closely held. Okay. But what I would say is that we've also reported this year on their valuation being more than $150 billion, right? And we know that because they're doing what's called a tender offer. They're taking insiders or employee shares and selling them on the secondaries market. And remember, SpaceX has been around for a long time, and this is like classic tech stuff. Yeah. If you've been at a tech company for 10 years, a lot of your comp is in stock. And you always ask, like, hey, when are you guys going to IPO? I kind of want to, you want to
get in
liquidity.
On the action. Sure.
So if you're not going to IPO, the secondaries market is another mechanism. And in doing one of those, they have to give investors some information about how they're doing.
Gotcha. That's reporting?
Yeah.
Wow.
Look at that right here. So you're saying